How do you build trust? I don't even know. It's tough.
If we could talk about uranium tokenization, are you seeing an increase of interest in such kind of real-world assets?
Absolutely, it's been a big trend. People are talking a lot about it.
Thank you, Arthur, for being here.
Thanks you for having me.
With the first question, if we can touch on the on-chain visibility, how does Tezos see that, such as public Baker votes and slashing, and how does it build everyday user trust?
So Tezos is a layer 1 blockchain, and it is a chain. It's been running continuously with no hacks since 2018. It is home to applications in the gaming space, finance, art. You can find AAA games like Ripper Actual. You can find tokenized uranium on Tezos. You can find great digital art, all sorts of things. And again, we're pretty security focused, so no hack. Yay! It's tough. It's very tough. But I would say that the nice thing about a blockchain is like there's nothing. In some sense, there's nothing to hack. If it works, it works. Whereas with an exchange, like you're constantly you have like an inside, which is this is where your key lives, and then an outside, and you have to protect. So like an individual user of Tezos might be hacked. You download you go to a bad link, you download something, maybe you lose your wallet. That can happen. But the system itself, in some sense, I think it's like easier to secure a blockchain than it is to secure an exchange. It's a very different problem. One is way more about cybersecurity, and the other one is more about how do you design a decentralized system, how do you use cryptography. So different type of topics. How do you build trust? I think you build trust over time. Ultimately, you can make all the claims you want about we're security focused. We use this we use a camel, we care a lot about type safety. You can make all these technical arguments. Most people cannot evaluate these arguments. So you could rely on external validation. You could get auditors. Auditors could say yes, we audited your contract. But I'll be honest, most auditors do not catch anything in the crypto space. I don't want to say it's a rubber stamp because they do some work, but I think they only skim the surface of most products. So definitely, if you don't pass an audit, it's a bad sign. If you do pass an audit, it doesn't mean that much. So it's time. Over time, there's two phenomena. Over time, one is the bad systems do end up, they end up weeded out. So you stay with the survivors, and then people say it's been there for a while. So that's how you build a trust, by repeatedly being reliable, repeatedly upgrading. The Tezos network has kept upgrading and getting better for the past 7 years. And from Tezos itself is not an organization; it's a blockchain. But there are organizations around it. It's about saying what you're going to do and doing what you said you were going to do, and having this reliability. That's how you build the trust.
I was wondering if you could give an example of a serious slashing case where negligence was done by bakers, since misconduct on the platform would seem almost close to impossible. Is there a specific case?
Misconduct is possible. It's just there's really no incentive to do it, right? Mm-hmm. There's no incentive to try to attack a blockchain unless you're sure you're going to succeed. So it would be a massive slashing event. It would be very costly. And also the benefit of proof of stake is not so much the attack is so expensive that you won't do it. It's not only it's that, but what are you really attacking? You want to try to attack a proof of stake protocol like Tezos. What's mostly going to happen is the chain is likely going to stop. You can try to keep going and partition the network and get to it's very hard to do that. You're going to lock the chain, and so you may be able to attack a bridge. An exchange probably not. Exchange is going to track, and also people have to KYC on exchanges anyway. So there's very little payoff. The chain can recover almost right away. So yeah, there have been some slashing. Most of the slashings, but all of them, they've never been malicious. They've been misconfiguration. Mm. Now the number one problem that causes slashing is people come from the web, and when you come from the web and you have an IT from the web mentality, all you care about is uptime. right? That's the most important metric. You want to have your 99.999. So we see people from these IT backgrounds, and they're like, oh, I'm going to set up redundancy. I'm going to have multiple bakers. And we tell them, like, no, don't do that. You'd much rather have like 99% uptime. Okay, so you lose like 1% of your stake. It's different from a website. If you're down for 1%, you lose more than 1% of your revenue because your users are like that. The website doesn't work. It hurts your image. If you're just validating a network, like, don't focus on your uptime. Focus on your security. So people set up redundant system, and then they double bake because they set up like, oh, I had a fallback machine in case the first one doesn't go. So, we've provided articles as a community over the years on how to do this. What I recommend is having like a single signer. So there's like, you can set up your signer on a different machine, and then the signer gets a request. So you can have multiple bakers, but the signer itself is going to be the bottleneck. And it's designed so that when you sign a block, you sign the height. So like with very little logic, including logic you can have in a hardware device. So people on Tezos bake with like Ledger wallets. The Ledger wallet will enforce that you never like double bake because it keeps a high watermark. It's quite doable. It's happened. It's very unfortunate when it happens to bakers. As of last year, the slashing is much more forgiving on Tezos. It used to be super high. It used to be like any slashing, bam, we take like half of your stake is gone, and the reasoning was like, well, it's not going to happen anyway. But misconfigurations happen, and so now it has a slashing mechanism inspired by some ideas from the Ethereum community, where if it's an isolated event, then very likely it's not an attack, and so it's a very small percentage that gets slashed. If on the other hand, it's like 30% of the stake misbehaving, then you get a big slashing. So it's gotten way more forgiving, and I think it's the right balance.
But in cases of community voting, let's say for centralized exchanges, there have been reports of exchanges that have often been criticized for its voting systems, failing to list tokens that receive strong community support through votes, and this creates a perception of the process is more of a marketing tool than a binding mechanism. So how does Tezos emphasize its position on community control? If there have ever been cases where Tezos had to decline a community's vote, how was Tezos able to proactively respond to the situation?
Well, so that's a big difference, which is like Tezos, unlike a centralized exchange is a company, it's an entity. Tezos is not a company, it's not an entity, so the votes are binding. So there's no like Tezos that can say, oh, we don't like this vote. The vote is a vote, it's binding. It's not indicative. And then it's like, oh, we vote and then we do something. No. It really happens on the fly. If people vote for a new protocol on a blockchain, the nodes will go and it will fetch the code on the network and it will install the code and it will automatically run the code. It's an automated process. So what the governance of the network decides what happens on the network. So there's no room for discretion here in terms of saying like, we don't like this.
And is that something centralized exchanges could possibly learn from Tezos? Or?
I mean, I'm not in the business of running a centralized exchange, and so I'm probably not in the business of like giving advice to centralized exchanges. What I could say is, if it's important for a centralized exchange to give guarantees to its community that it's going to list, it could use like binding mechanism. It could use smart contracts. It could put like some money in escrow in a smart contract, makes the vote on chain, and somehow if the token is not listed, you have an oracle, and then maybe the exchange gets slashed. So, like smart contracts are a really interesting tool for coordination and for credible commitments. So if exchanges really wanted to have like more credible commitments, because they feel like we'll get more users if people really trust that we're going to do these things, as opposed to more discretion, they could do this. But I'm not sure. Maybe the balance is that it's better for the exchange to get like some discretion. Certainly, like there are legal requirements around listing that an exchange has to follow, and so I could imagine situations where the community might vote for a token and the exchange says, "Oh, sorry, we can't do it for legal reasons or whatever it is."
So what excites you most about homegrown features like the adaptive issuance or Etherlink's L2 for real-world assets?
Right. So, I mean, I get excited by adaptive issuance. I don't expect many people to get excited by adaptive issuance. It's not, by itself, it's not an exciting feature, but what it does is that it automatically reduces the inflation as a function of the amount at stake. So the first model in Tezos was, hey, there's going to be about like 5% inflation, but it's okay because you get it back in rewards. And so like some of it will be kept by the bakers, which are the validators of the networks. The rest will be redistributed back to the token holders. And so, if the bakers take like 10% and you have 5% inflation, that means as a user, you're getting 4.5%, there's 5% inflation, so you get diluted by about 0.5. And you had a market mechanism that automatically found what was needed for the bakers to run the network. And from an economic perspective, it's equivalent. In the real world, that causes issues. One is that the tax code in many countries is inconsistent and recognizes staking as income and price appreciation as capital gains. And so if you have a system like this, the dilution you get from the inflation lowers your capital gains, but the rewards increase your income tax. And if there's a difference between the two, it creates a tax on the system. It's tax inefficient as a mechanism. That's one of the problems. It's also not very compatible with DeFi because in DeFi you want to pool your tokens, or with anonymity you need to pool your tokens. So as soon as you have a pool of tokens, you have the question of like, who should be the validator for this token? So a better system is one where you have a curve and you look at how much issuance you have, how much staking you have, and if tons of people are staking, like great, people are willing to lock their capital for a while. Fine, we can have very low issuance. And then if the issuance is too low, people say, it's not worth it for me to lock my token when the issuance is so low. So they unstack, and then you find some sort of equilibrium. So you can decide beforehand what's your target, like how much of the token should be staked, and that's I would say it's political decision in some sense. It's like how much do you want to weigh towards like how much should you be spending for your budget? Like, well, you'll target like around, like let's say on net issuance we target 50% staking. Okay, so you want to target 50% staking. What should be the rate? Right now we have about 27% that's like staked on the network. Much more that's delegated, but 27% that's staked. The staking pays about 10% a year, which is pretty decent, and inflation is around 4%. The goal is to get it much lower than that. So I get excited by it because it's like, it makes the system better. It works better with DeFi. It works better with layer 2s. It works better with the tax code. But ultimately, if you just want to use a system and there you might not care about it if you issuance. But I care because I'm involved a lot in the design of Tezos.
If we could talk about uranium tokenization, are you seeing an increase of interest in such kind of real-world assets?
Absolutely, it's been a big trend. People are talking a lot about it. We are doing something a bit counter to the market. Everyone's excited now about tokenizing money market funds. It's like, now you can have money market funds on chain, and why not? Like, there's a bunch of traders who are on chain. Sometimes they want to trade out of their position. They don't want to leave the chain. What should they do? Well, they could lend in DeFi, or they could buy a money market fund. I don't know. I would lend in DeFi. You get way more yield lending in DeFi than in the money market fund. I think a bunch of foundations in crypto which have trouble getting banking are buying some of those. So why not? I don't see it yet. And then people are doing tokenized stocks. Great. I love stocks. Stocks are great. But then they will give you stocks that you can buy anywhere. It's like, okay, so we've tokenized Tesla. Great. I have a dozen services can let me buy Tesla. Different if you go out of if you go out of the US, but even if you're outside of the US, most places in the world you'll be able to open an interactive broker account, or some other brokerage. I like AB. But there's a lot, there's a lot of options you have. I guess for some people that really remote part of the world that don't have access to it, but I don't feel like that's what they're doing. It's not like we're going to tokenize NVIDIA so that we can give the stateless people of South Sudan access to this type of thing. This is not what's going on here. So I guess it's convenience. It's I'm trading in my crypto wallet. I don't want to leave my crypto wallet. It's a little bit of convenience. Convenience is nice. We're excited about bringing assets that don't exist anywhere else. And uranium is fantastic. It's a key asset for the future. There's a massive boom in nuclear energy, and there's no marketplace for uranium aside from uranium.io on Tezos. I'm way more excited. I mean, I don't know. Like, I'm way more excited about this than doing a money market fund. I mean, look, if you want to tokenize a money market fund, go on Tezos by all means. Like, we'll have you. But what gets me out of bed is like getting these weird assets that, like, I guess the only thing that's weird about uranium is that it's not more mainstream, right? Like, I'm not talking about long tail assets that are illiquid that no one wants to trade. I'm talking about like major asset classes which are not being represented, which are not part of the financial system.
Are there any other RWAs that Tezos is exploring?
So Tezos is a blockchain by itself, so can't explore anything. But Trilitech, which is a hub based in London, which does a lot of activity and like actually like led some the tokenization of uranium, is looking at other things. So other metals. I think we want to see that uranium is a success and like really like get the formula right before expanding to other metals. But other metals are of interest. And I think tokenized equities are quite interesting. But I want to find like I'd be interested in finding a ways for companies to go public on a blockchain, as opposed to just like taking a thought that that's existing. Like, can we make a blockchain the destination for capital formation and trading? And I think that's possible. I think we could see that. Like one of the main benefits you get out of it as an issuer is a global reach. Like immediately having a global audience, and it's so weird today that you have these massive differences in the world in the valuations. Like stocks will list in the U.S. because they know that by listing in the U.S. they'll get a higher valuation, they'll get higher multiples. Like you look at the stocks in Korea, like tiny price earning ratios compared to the U.S. And there's some reason. It could be like governance, it could be like country risk. There's a couple of things, but I still think the main reason for this is like structural, like laziness and short-term trades. I think there's a lot of capital in the US that's invested in stock. So a lot of capital outside of the US does not invest in stock, right? They invest in bonds, they invest in real estate. They don't invest sufficiently in stock. Like the American public has way more appetite for stocks, like either directly or through pension funds than does the rest of the world. So, but I also think that they underinvest into foreign countries. So as a result, people want to go and list in the US. Can we break this? Can we make it so that you list in a blockchain and now you're a global equity? And perhaps like this is how you attract the most capital. That would be cool.
How about for Tezos' expansion in gaming? Are you guys looking into the gaming industry a bit more?
Yeah, absolutely. I think it's one of the best way to get to 100 million users is the gaming industry. And I don't know when it'll come out, but October 6th, there's the Foundation Alpha of a game called Reaper Actual. It's a AAA game by John Smedley, who is one of the creators of EverQuest, that's coming out on Tezos Etherlink. Super excited about that.
And to our final question, as you brought up, could you share with our viewers and listeners Tezos' ambition on powering the next 100 million users?
Well, it is our ambition to power the next 100 million users, absolutely. The question, everyone wants to do that. The question is how to do it. And we've taken big swings in the past. Like I would say a lot of the verticals we focused on, like real world asset, not just DeFi, but real world asset, because that has broader reach, I think, than DeFi. Arts and culture, I think, has a potential. It's tough, like people haven't cracked the formula yet. We tried with sports, for example. Very hard. Like I think it's still too early. It's very, very low. People think too much of crypto as like, this is a place where you go and make money, as opposed to something that you use. So like very low conversion rates. I still think there's something there, but it might take a long time to coalesce into something. And gaming. Gaming might be the first. Might be the first one.
We touched a bit on community governance, but is there anything we could perhaps you could expand on? Let's say I know we mentioned previously about let's say centralized exchanges. Of course, it's different than a blockchain platform. But is there anything that I guess, and this is off the record, of course, but is there anything that you see that happens in let's say centralized or decentralized exchanges that they could learn, I guess, from Tezos, from Tezos' protocols or anything?
No, I think it's the opposite. I think a lot of blockchains could learn from centralized exchanges.
I see.
And it's interesting, like a lot of the vertical integration between a blockchain and a centralized exchange historically has worked quite well. So, examples of that are, like some of the most successful ones have been Solana, because we forget now, but basically Solana was the FTX chain, right? And they were made by FTX. There wouldn't be a Solana today without like the influence of FTX. Like they had a decade-billion-dollar fraud propping them. Base with Coinbase, and BNB of course with Binance, and I'm sure KuCoin has a chain, and like almost everyone has one. And the reason for that is because exchanges own their distribution, and L1 networks do not own their distribution. Like, you know, when I do work on Tezos, around like there's different entities working on it, they work on the code, they work on some initiatives, but like I don't even know who owns Tez. I can't contact people. There's not an app where you get a push notification if you have that. So there's this lack of distribution, and by controlling the distribution, the exchanges actually have enormous power in this respect. And so I think we'll see more like exchange-led blockchains succeed, especially when you think that the exchange is like almost always a first point of friction for a user. Like you have the friction of creating a wallet, but there's a lot of technology that has come to like smooth this over. But then the next thing, once you created a wallet, you need to fund your wallet. What do you need to do? You need to create an account in an exchange. Can't do it otherwise. So it's like they are very they hold a very strategic position in the whole industry.
Thank you so much, Arthur.